tryna take it down, place for you just scoring minds, best the bar.
All right, ladies and gentlemen, I got your watch list coming into February 14th, 2020, and the Colt loves you and is your Valentine. No, but in all seriousness, though, I do love you. The Colt loves you, man. Shout out to all of you. But I'm going to talk about how the stock market is getting ready to move big, or it's going to move big, or really there is a big shift coming, and I want to talk about why that is. Has to do with some of the stuff we've already been watching, how much time has gone by. We have the next biggest earnings week. The biggest earnings week is next week, and then there's some other changes, fundamentally that we need to talk about. So I want to go over that quickly with you, go over our plays. We had another $100 into $1,500 is what I'm expecting tomorrow. I will go over that play with you guys. It was a little different. We used the same strategy from yesterday. A lot of our free options hit, and they're going to produce hopefully some pretty big gains. So I want to go over how we could estimate what the value is, but also now the plays I'm going to be playing tomorrow in sense of how we're going to roll them over and how we're going to play these continuations. Tomorrow is going to be a Froggy Friday. So there's going to be a lot of opportunity, and there's the continuations in this shift. So I hope you guys are ready. So I got the keys for you, all that. Let us get into it. But you guys know what you need to do. Drop your thumbs up on the video. Make sure you're subscribed. And if you don't know, we are live Monday through Friday, 30 minutes before open. It's the first link in the description, and it is pinned in the comments. YouTube.com/the stock market. Just go there during the trading day, or go subscribe now with the bell. You can watch all of this live. All we ask is that you are positive and respectful. So you want to see plays, maybe you got plays, you want to chat about it, ask questions. That's what it's there. Just be there. And especially, we're 2 weeks away from March. So if you need that stock news, it's a great free stock scanner. And do not forget the most important thing you need to do. Post your watch list below. Let us know what you're looking at. You got any plays, comments, continuations? What Friday YOLOs? What Friday Froggers? What do you got, baby? Post it there. Let's source that info. We need that unity, baby. But without any delay here are the main keys we need to watch for. The first fundamental change that happened today is that the Fed said they're lowering and tapering off the repo amount. So they lowered it by 10 billion in certain areas for the term repos and all that. But essentially, this is the first step in the first opportunities now for investors to react to this. So now that this has happened, you saw the market go down a little bit today, and the big thing that, markets really responded quite rationally today. It was a little interesting in the sense that all the new virus cases, oil and everything, the market dropped, but eventually the market ended up going back up, and at one point we saw oil leading, but now you see the divergence came in there, but that's the main thing we're watching. However, what that got to show us, there was a period where the market really wasn't responding to oil and all that, but really in regards now to this nCoV and everything we got with the virus. But now I want to see how investors start to digest this lower repo. Do they throw this tantrum? Now this is the natural progression. Anytime the Fed has started to taper off, or they've lowered or raised the interest on excess reserve, they take these small steps first to start kind of weaning off of these fiscal drugs, but you have to see how the market reacts. So that's going to cause a potential for a shift. But now the big thing, again, when I mean a shift or a big move's coming, we might see that tomorrow, because now we have the second wave of the virus stuff, but then also this long weekend. The market is going to be closed on Monday. So I'm saying watch for the shift, but this also could come into the end of next week as well too. This is what I'm looking to see, is how does the market react, or how strong does the second wave come in? But the danger zone is the end of next week. And so what I mean by that is, by the end of next week, you start looking at 4 weeks of economic shutdown in China. So people are looking at everything from pollution all the way to traffic data. Even though they said stuff is returned to service with the economy, we're not really seeing that. But if it gets worse and we start seeing more fear, or again, even more social unrest, but at the end of the day, the longer time goes on, it's going to start getting reflected in data. And then 6 weeks after that, then you're going to start seeing the data from 6 weeks ago get reported. This is where you might now see the market start to shift and start to reprice in and get ready even for pricing in Q2. But again, next week is the real danger zone. You have to think it's been blowing right before our eyes, but we're really approaching 4 weeks of economic shutdown. That is a whole month that has a huge effect. And again, as that starts to continue and that goes longer, that gets worse. And again, you will see that reflected through oil and then eventually markets. And then watch the currencies as well. The dollar's been making move. The yield curve is flattening more, and bonds made a move today. So you're getting everything still moving on the underlyings and diverging, but the market really still hasn't quite made the shift. This is still that digestion process. So again, it could be up or down depending on how it gets taken, but I am going to be watching for how the market starts to digest all this and how news comes out. But now we want to start getting prepared. I will probably scale in tomorrow, given this long weekend. I might grab some small plays on there. I'm thinking mainly just small puts. Again, we've been cashing out with these earnings, so now I could start throwing a little bit there. But again, balance the books. But if I don't see anything too crazy, I'm not going to force. Again, it's better to be late than wrong, baby. But besides that, too, you got the biggest earnings week next week, and this is going to be the buffer on the way up or down, and that's what's going to let us, push us up to newer high levels or low levels, or the market will respond to news and everything else, and then the earnings will help kind of be that gust of wind to help slow or speed up any sort of move. So watch that and even start getting prepared for some of those companies. We're going on 5 weeks of 1,000%, baby. We've booked 4 weeks in a row. So that's pretty much it. I hope you guys are there tomorrow. I hope you're excited. Be smart. Hopefully you guys cash out. A lot of people got free gains on Nvidia, on Expedia. There's some good money there, man. Be smart with all of this. Shout out to everybody on there. And hopefully you guys continue to be smart. And now, even then, I guess, well, let us get into the plays. But what I'm looking for, I'm going to go over the play we made again. So it was about $150 into $1,500 is what I'm assuming. I'll show you where I got that number from. And this wasn't a ghetto spread. We did things differently. I guess the too long didn't read. I did the same exact strategy from yesterday. I made a big position pre-earnings today on Expedia. It went up. We sold, got our initial investment back, and we got free plays that we didn't have to pay for, and then now those hit, and if those go 1,000%, I'm assuming like 500%, but those are going to be great. But that being said, the main play I'm going to be looking for is both Expedia and Nvidia for the continuations. They're usually fire. I want to say they always have good, continuations, and if you're not familiar with the continuation, after earnings move, there's going to be that continuation. So like Nvidia did good, it went up, but people were already expecting it to do good. They beat, but now you're going to get upgrades, downgrades, all that, but more or less the move, whatever first initial move it makes, it's going to continue in that direction, and now you'll get to see more of that move come to life. The first move on earnings is one thing, but then the continuation is the next part, and that's sometimes where you could see some big gains, and that's where having long-term on some of these contracts or a little bit more time has greatly benefited. But I'm going to watch out for that. And now the other main strategy I'm going to talk about that you guys need to look forward to, again, that's why be there. I have videos on this, but it's just like the strategy from yesterday, but this is how you're going to roll over. So I want you to take profits. I did sell out of all of my February 21st Nvidias today. So I booked 1,000% on that. We collected 70, got about 700 in profit. And I did that to lower risk and pay myself. Pay yourself. I rebuke anybody. I don't want you to say, oh, I coulda, woulda, shoulda. Who gives a crap about that? As long as you get the money and book it, as you see, week after week opportunity, anything with the long-term shares, you could do something with it. So don't even worry about taking profits. You're going to have more regret if you don't pay yourself, or it's like, yo, there's all these 1,000%, but then you're like, well, why isn't my account up? Why is it not doing this? Take this money and be smart with it. So don't be afraid to book profits. So now with this is the rollover strategy. And what I like to do is, I've done this with Expedia. I did it with Nvidia. We're going to buy the rollover in the morning. It's just like, again, the strategy from yesterday, where it's going to be hit or miss. So you're going to buy something in the morning. If it continues in that direction, it's going to set you up for a beautiful rollover. But if you're wrong, you're going to lose 50% of the option most likely. So keep that in mind. It is very hit or miss. So depending on if you're conservative or not, decide that. And then to also understand, option trading is extremely risky. You can't lose all the most for financial investment. Please consult financial advisor as a case purpose only. But this is what I'm going to look to do. I'm going to buy the rollover in the morning, and then as the stock moves and continues in that direction, the other plays that we have, I'm going to take some profits on those. So then now I'm able to book a bigger profit, and then I only spent a cheap amount on the rollover, and then the cheap rollover should have appreciated. So then that way I'm not holding the play, selling out at a high, taking my profits, and then rolling over to an option that's already expensive. The idea is you bought it when it's cheap, but by doing that, you expose yourself to additional capital outlay. So let's talk about this Expedia, though, how we did this play. It was in the video yesterday. Hopefully you guys watched it. I even sent it out on the stream alerts at night. So I said, you guys got to understand this, especially if you've been watching me lately. I'm remixing this earnings season. We've been having more opportunity flipping the earnings premium, getting these free contracts, and I'm just gambling with the free contracts instead of using initial investments. So in the morning, what I did, this was early in the morning, again, playing the premium from there. I chose Expedia, and it has the same logic as even TripAdvisor and all that. Remember, I said it's like the opposite, but they had big earnings moves. It moves a lot, but now having a 20-30% move from last earnings, analysts and investors are looking to see how it does, and that's really going to determine the price from here. It's either if they get worse, it'll go lower, or if they're able to recover, you could see a big bounce. And there's a lot of room with Expedia, and it's a big mover. But here's how we did the play. We grabbed these 130s in the morning, and I grabbed 20 of them at $40 a pop. So that was $800 initial investment. I put $800 in, and then what happened, and even then, though I said it was going to be a quick flip, this is how you have to understand. It's not as if we're day trading it or scalping it. If the opportunity presents itself, awesome, we're able to take it if the underlying moves or the volatility goes crazy. But in this case, it really didn't. It went up a little bit in like 30 minutes, but then it came down. It wasn't enough room there to do it. So, but then eventually it started going up and the contracts hit 60. So that's when I saw the advantage there. And that's what I wanted to do, because we bought it at 40. It's up at 60. It had 60 on the bid. So again, I saw the depth. I saw I could get filled. So what I did now was I sold out of the 20 contracts. I sold 14 of them. 14 times $60, that leaves us with $840. So remember, I spent $800 for 20 of them. I sell 14 of them, and then I get back $840. So I made $40 profit, but then I'm still holding now 6 contracts for free. So now I have 6 of these 130 contracts for the call side. So again, that was literally free. I got all my money back with profit, but now I get to play a big earnings position, $300 gambling on earnings. It has time with March. But again, all of my initial capital is back. And now, even then, this wasn't a ghetto spread. So all I have is upside. It's not capped in any way, shape, or form. But then I also went to do it with the 90 puts. So again, sometimes both calls and puts go up. And we did see a weird phenomenon with the puts. They just didn't go down. So what happened is I got these puts. I then got 20 of the puts at 42 cents. So it was about $840. But then at close, it didn't go up. They didn't really go up at all. And that's what happened. So the other ones went up, but not only did these calls go up 50%, pretty much these calls just stayed in the exact range. The puts, they just didn't move. So at close though, I didn't gamble it like I did with the other one. So remember, we spent $840, but what I did, I had 20 of them. I sold 19 and I got filled at 39 cents. I got $741 back. Remember, we made $50. That brings me up to the 800. So pretty much I risked $40. I bought one put, but then I had all the calls. So essentially it was about $40 now into $40 was the real risk on the trade. That's how much got spent net out of the account. But now we were sitting on the calls, and then Expedia went up. So now why am I saying $1,500? Because I have 6 of these calls, and now I'm assuming they're going to be worth about $2 to $3 tomorrow. If there were 6 calls at $2, it'll be $1,200. 6 calls at $300 will be about $1,800, and that would be about a 500% move because they're still going to be out the money. But now if Expedia goes up and goes crazy, we could ghetto spread these in the morning or hold them. But where do I come up with that number? You could use like option profit calculator, but a good rule of thumb, and the best part is, since these are March, these aren't going to get hit with too much of an IV crush. The IV is still kind of high, but compare 30% to like 60%, on the Februaries, you're not going to see it get affected too much, but that's why you do have to factor this. But the at the monies were going for 5 to 6, and then one spot out the money was selling for 3 to 370. The other one was 160 to 340, or like 250 in the middle. So we're going to be about two spots out of the money on the Marches. Based on it's here again, we'll see where it opens up. And last time, Expedia moved another 4 or 5% pre-market on the low side. Expedia with all the travel companies, I think it's going to be good. So I'm going to hold for the continuation, but I'm also going to look to do a rollover tomorrow. But essentially, those 6 contracts are going to be worth like $200 to $300. I mean, 1,000% would mean they went up to like what, $4 a pop. And if that's the case, since I'm holding around, the carrying value is like 300, we would make 3,000 on that play max. Next one though now is NVIDIA. I also play the ANETs too, and that's something we talked about. We did put ANET. I did end up putting $200 on ANET both ways, and surprisingly, it dropped. I mean, a decent amount. So those will be good. But I got a June contract for ANET on the call side, and then we got a March 6th, like 180 puts. So those might gain value, might be break even. But even then, we spent $200 here. You see, we spent 50 on Expedia. If that pulls up 1,000 to 3,000, we're still well above the balance there. It makes up for it. But now too, we had the NVIDIAs, and now those ones, these are going to probably go up another 1 to 200% tomorrow. And why is that? Is because you guys got to realize the contracts went up anywhere between 500% and 1,000% already. So it's still going up. So if it goes up 100%, 800% from where it's at today, and that's already up 800%. You're really walking away with 1600%. So those are going to be good. We still have those March 20s, and then I have the February 14th. The February 14th will be a little precarious, but again, continuation on those is going to be key. But now too, if we're even able to walk away with the Marches, even if I sell those out 1,000, 2,000, even though we lost that $2,000 on TripAdvisor from that bad trade today, we still have time. I'm going to hold that a little bit, but essentially we're still going to be able to walk away at the end of this week with some profits, assuming we book them. So make sure you guys sell out and are able to take that. But those were the main plays today. And then AMAT did good, and that's another thing. So remember, we did this strategy yesterday, but we did it on the ghetto spread. So keep that in mind. Remember, we have these 80s, and they ended up dropping today, but at one point they went to 24. And remember, we have 50 of these contracts at 13 cents. So I still closed up on this trade, but here's how you could do that. And this is how you could, again, this is why this strategy is beneficial, even if you cap yourself with the ghetto spread. But 50 contracts times 24, that's $1,200. Remember, we got those all paid for, so we had $1,200 carrying value when these were at 24. But then remember, we sold 50 of these, so then these were at 9 cents, but we sold those at 13 cents. So that's 9, 10, 11, 12, 13. That's 4 cents a share times 50 contracts. That's the difference. That's another $200. So we had $1,200 plus the 200 there. We were still in profit on AMAT, and AMAT's still going up. It's doing the continuation move. So I'm going to hold that one there for a little bit, but you're getting to see the advantage of making, these bigger positions, but how we're taking advantage of the earnings premium. It's been paying off pretty good, and it's given us some pretty sizable opportunities. But watch those, everything else, and I have plays out again. I'm going to be watching tomorrow. We also did a McDonald's. We sold the 222.50 put and bought the 220 put. It was a $7 risk. We got $2.43 credit on the credit spread. Another Thursday play. It's a 15% probability, but you're most likely going to lose. So we shorted this put, bought this put. It's a $7 risk because we collected $2.43 in credit. The collateral's $250. You only have to put the $250 risk. And again, I said this, do not make these Thursday, Friday trades if you do not understand the risk. What's going to happen is you're supposed to let these expire. The only thing you could lose is that difference between the credit and collateral if you take it to expiration. A lot of noobs, and if you aren't familiar, you'll make the mistake. You'll open one of these trades, even like those Google Condors. It has a defined risk. You can't lose more than that. But if these spreads go wild, it may say you're down more than you are, but you're not. But some people will panic and end up buying back to close the trade and lose way more than literally and factually they could ever lose. So just be cautious with that. And then also, if you have to take it to expiration, unless you have a big account, you're most likely going to get locked out over the weekend, and it's going to say you owe $20,000, but you don't. That's just the trade's clearing. So please remember that. But we did this play. I like it. If the stock goes above 220, we still have that other play that went up a little bit from yesterday. They went up a little bit and then they came down, but they're still holding the value. But if McDonald's does rotate, that could be a good one. And hopefully, a good credit collateral, that would be the icing on the cake. But watch that. Then watch Microsoft and Amazon. We have the Microsoft puts. Remember those Marches. Those are still up. I'm still holding those. The fact that they're holding value, again, considering everything and where Microsoft is, I kind of like it. But a judge put the Jedi contract not on hold, but he prevented Microsoft from starting on it. So it's kind of like a pause to the deal. That's why they went down, and then Amazon went up, but then came back down off of it. But essentially, it could be positive for Amazon. However, it just means it's going to slow down Microsoft. But why is this a big deal? Because when this deal went through, you could see in October, Microsoft went up about $5 off of that move. It was pretty much priced in, whereas now Amazon dropped off of that news when it was announced because people thought Amazon was going to win it. So there could be potentially a $5 effect priced into that. So if they lose it, it could go down, but we're going to see how the market interprets this too. So keep an eye out for that. Then watch the video and also the Redfin. So this play is scary. I told you guys that was going to be the stock to surprise. That was just, again, the real estate data. It's closed up 20%. Killer play, but even more killers. We have 90 days left on these contracts. So the 35s, they didn't go up as much. 200% is not that much considering it moved 20%, but it's because we're further out the money. But now you have a lot more safety. So I'm just going to ride this. You can't ghetto spread this. Hopefully they add more contracts, but for the most part, I'm just going to ride the wave on this. I like it because now Redfin is going to start hitting a danger zone for the good where, again, we have May on those contracts, but now it is back above every single other level. This is IPO zone at the last high they hit. So now that you're getting more volume and more people buying it than IPO at a higher price, one of the highest prices, it's looking good because people now are seeing how the data is performing, and now even Redfin's showing out. So shout out Redfin. That's a good contract we're holding. Maybe, I don't know, if maybe we keep it with enough time. If it goes crazy, you could always exercise that and turn that into shares. If you ever thought about that, keep that in mind, baby. But there is that. Watch Qualcomm. I still want to make a play on this. Again, I think the video will have affected it, but I might get that play tomorrow. I'm thinking on the upside just because it's been a little bit just weird with how it's moving. So I want to see how it rotates with everything else. Watch Walmart. I might make a play on this tomorrow because they have earnings on Tuesday and the market's going to be closed. So if you want to get that, since they report pre-market, we will have to do that play on Friday. So I'm going to be watching them. Watching HD in general. It's popping up how I expected, but it's still slowing down. I'm still expecting an explosive move from them. So keeping our eyes on it tentatively, no play yet. Watching the UNHs, they're still at 302. That's the next level tomorrow. If it does get around 307, it could get a lot of steam, or it's going to play that pop and then lag out and then fizzle out. But that could be a good one, especially if it gets any late day activity. Watch the video. That's going to be our continuation play. Then TLT, I like this one a lot. The contracts are getting cheaper as time runs out. We have to watch this to set up for the shift. So that might be any of the put side plays I'd want to scale in. I might do it through TLT. Watch Snapchat. The fact that it's been holding up, it's operating a little different from the market, but even how it just held up today was pretty strong. Keep your eyes out for this. If the market comes down, you might see people, the shitty stock rotation. Snapchat it plays both shitty stock and good stock. So I mean, I like it. It's versatile. But watch them. And then finally, Boeing. On a Friday, they might have some news. We've seen it lately. They had some news earlier in the week. They dropped off. Our play's most likely going to expire, and they have ex-dividend too. So keep that in mind. But I think it could be a big move. We'll see what happens. But that is your watch list, ladies and gentlemen. Make sure you're hydrated, healthy, ready to go. Make sure you post your watch list. Make sure we see you there in the morning. Keep the helmet on. I need y'all to embrace the positivity and remain positive and be prepared and understand how it is. Opportunity needs a goal, baby. Understand what the opportunity is. Control the budget. We don't have time to look back at the past. You missed the play. I told you it's going to happen again next week. The week after that, you're going to make moves, baby. Do not force it. You only lose when you quit. Save up the money. Balance it. Spreads and events, baby. We got a lot coming. I need you in the game. I love you all, baby. I'm going to see you there in the morning. Let's go.